Welcome to FinTickAI's today's market analysis for March 19, 2026. The Nifty 50 closed at 23,002.15, down 3.26%, and the Bank Nifty closed at 53,451.00, down 3.39%. Want to stay ahead of the markets? Hit that subscribe button right now for your daily and weekly edge on Nifty, Bank Nifty, and in-depth sectoral analysis. The Nifty 50 market summary shows a severe wave of distribution, plunging 3.26% to 23,002.15. The index has broken down aggressively across multiple timeframes, marking a sharp decline over the past quarter. This indicates heavy institutional offloading, driven by macroeconomic and geopolitical shocks. Technical indicators for Nifty 50 show concerning signs. Momentum is oversold, with the stochastic oscillator at 16. The MACD trend is at minus 541.4, with a signal at minus 435.5. Market breadth is bearish, with moving averages trading below 8 out of 8 SMAs. Examining Nifty 50 moving averages, all major timeframes, from 5-day to 200-day, show a breakdown status versus the last traded price, reinforcing the strong bearish momentum. Nifty 50 market signals reveal some near-term oversold conditions, hinting at exhaustion of selling pressure. However, bearish signals remain dominant, with trading completely below the critical 200-day SMA. The RSI is approaching the oversold threshold but is technically neutral. For Nifty 50, immediate resistance is at 23,887.20 and support is at 23,643.40. The breakdown level is the day low of 22,930.40. Probability distribution shows a strong bearish outlook at 60%, with 25% sideways and 15% bullish. Make sure you stick around until the very end, because we're breaking down the complete analysis and revealing the critical levels you absolutely need on your charts. You receive a bonus of the curated trade setups basis weekly calls. The Bank Nifty severely underperformed, collapsing 3.39% to 53,451.00. The financial index was hammered by relentless selling, pushing technical indicators deep into the bearish zone and shattering all critical moving average supports. Bank Nifty technical indicators show momentum is depressed, with the stochastic oscillator at 20.0. The MACD trend is deeply negative at minus 1,471.5. Market breadth is bearish, with moving averages below 8 out of 8 SMAs and a dominance of bearish oscillators. For Bank Nifty moving averages, all SMAs across the analyzed timeframes are in breakdown status versus the last traded price, indicating pervasive selling pressure. Bank Nifty market signals show a severely depressed stochastic oscillator at 20.0, suggesting a statistically probable oversold bounce. However, the bearish setup is strong, with the MACD well below the center line. The trendline momentum score sits in the technically neutral zone. Bank Nifty's immediate resistance is 55,690.43 and support is 54,825.38. The breakdown level is 53,433.04. The probability distribution is significantly bearish at 65%, with 20% sideways and 15% bullish. Looking at top Nifty 50 market gainers, only one scrip, ONGC, was isolated by the institutional screener, showing a greater than 3% standard parameter change today. ONGC gained 1.6%, showing high volume in the energy sector. The top Nifty 50 market losers saw massive distribution across core financial and auto heavyweights. Shriram, Fin, and Eternal faced the largest percentage drops, with key supports broken across all listed scrips. Stocks near their 52-week high show strength as capital rotates out of IT and consumer staples. CCL Products, JB Chemicals, Tata Power, Great Eastern Shipping, and Ather Energy are all sustaining momentum or holding relative strength in defensive sectors. Stocks near their 52-week low continue secular downtrends. Deepak Nitrite, TCS, and Godrej Consumer Products are collapsing structurally or breaking below primary support on heavy volume, marking severe weakness across heavyweights and mid-caps. Reviewing the top trending stocks and movers, we see Shriram Finance and HDFC Bank suffering brutal intraday collapses. Conversely, ONGC was the sole Nifty 50 survivor, while TCS and M&M experienced complete breakdowns of primary trendlines. Persistent high global bond yields and inflation fears are fueling aggressive FII equity offloading. The escalation of the US-Israel-Iran conflict and regional spillovers have triggered an energy shock, with Brent crude up 7% and EU gas prices up 30%. Please note this is a regulatory disclaimer. Investments in the securities market are subject to market risks. Read all related documents carefully before investing. This is a probability-based analytical outlook for educational purposes only.